The current live price for Datavault AI Inc. DVLT on the NASDAQ is at $0.68, showing a decline of $0.013 or 1.94% during today's intraday session on Friday, January 30th, 2026. While the ticker is flashing red right now, the real story isn't just a 2% dip. The unexpected reality is that while the stock is struggling to maintain its footing above the 65-cent mark, the company just announced a massive strategic alignment through its primary shareholder, Silex, involving a $20 million investment into QuantumScan. This move is intended to create a direct synergy with Datavault's data monetization engine, yet the market is treating the news with a cold shoulder. Most retail investors looking at their Robinhood app see a penny stock that has shed significant value since its January highs, but the underlying tension between this price action and the company's aggressive revenue guidance for the coming year is where the real analysis begins. The common expectation among the trading community is that Datavault is another small-cap tech firm overpromising on the potential of artificial intelligence to mask a thin balance sheet. You see this narrative all over social media and basic investing sites. People look at the negative earnings per share and the historical dilution and assume the story is over. However, the reality we are seeing in the actual data suggests a much more complex transition. Just 2 days ago, the company inked a deal with Sports Illustrated to build a digital asset exchange for athlete name, image, and likeness rights. This isn't just another press release. It is a move into a multi-billion-dollar niche using their patented data valuation tools. When reality exceeds these low market expectations, we often see explosive reversals. But for now, the selling pressure from institutional activity and insider liquidations is keeping a heavy lid on the price. Looking at the daily swings, we've seen a consistent pattern of sell the news behavior throughout January. Every time Nathaniel Bradley and his team announce a new partnership, whether it's the Taiwan Research Center or the Sports Illustrated deal, the stock sees a brief morning spike followed by a slow bleed into the close. Today is no different. We opened near 68 cents, tried to make a run towards 71, and were immediately met with resistance. The trading volume today is sitting around 16 million shares, which is actually quite low compared to the massive 100 million share days we saw earlier this month. This tells us that the initial panic or euphoria has settled into a period of consolidation, but the bulls are clearly hesitant to step back in until they see proof of revenue. Institutional activity has been a mixed bag. While we've seen some small entries from firms like Prelude Capital, the elephant in the room is the massive selling from major holders. In the last 90 days, over 31 million shares were dumped by insiders. When you see that much paper hitting the market, it creates a supply-demand imbalance that no amount of positive tweets can fix. For those using a Fidelity brokerage account or Interactive Brokers trading tools, you can see the technical damage on the charts. We've broken below the 20-day and 50-day moving averages, and the stock is currently fighting to stay within a horizontal trend channel that dates back to late last year. If it loses this 68-cent support, the next floor doesn't appear until we get much closer to the 50-cent level. The macroeconomic pressure is also playing a role here. Small-cap AI stocks are extremely sensitive to interest rate expectations and the overall appetite for risk. When investors feel jittery, they pull capital out of speculative names like DVLT and move it back into safer havens or individual brokerage accounts holding cash. This is why we see such a disconnect between the company's internal milestones and the stock price. Behind the scenes, Datavault is actually growing its infrastructure. They're currently rolling out edge network nodes in New York and Philadelphia, aiming to hit 100 cities by the end of the year. They've even gone as far as to set a revenue target of $200 million for 2026. To put that in perspective, their current market cap is sitting around $388 million. If they actually hit those numbers, they would be trading at a price-to-sales ratio that is almost unheard of in the tech sector. So, what exactly does this company do when they aren't issuing press releases? At its core, Datavault AI is a data monetization specialist. They use a proprietary platform to value, score, and trade data as a real-world asset. Think of it like a stock exchange, but instead of trading shares of Apple stock or Nvidia stock, you are trading the rights to specific data sets or digital assets. They have two main divisions: acoustic science and data science. The acoustic side handles high-end wireless audio technology, while the data side uses blockchain and AI to create what they call digital twins of assets. This allows companies to take things like medical records, sports statistics, or even real estate data and turn them into liquid tradable tokens. Their business model relies heavily on licensing and transaction fees from their information data exchange. They aren't just selling software, they're building the plumbing for a new type of digital economy. However, the older reports show a company that has spent a lot of money to get here. Last quarter, they reported a net margin that was deeply in the red, and they've had to rely on convertible debt and strategic investments from partners like Silex to keep the lights on. This is the classic burn phase of a tech startup, but because they're publicly traded, they have to navigate it under the harsh light of daily market fluctuations. Comment below and let me know, do you think the sell the news trend for DVLT is finally bottoming out, or are we headed for another round of dilution? It's a question that everyone on the SoFi investing platform and Robinhood investing app are asking right now. The answer likely lies in the next few months of execution. Looking toward the future, the outlook for Datavault is entirely dependent on whether they can convert these exploratory agreements into definitive revenue. The catalyst to watch is the second half of 2026. Management has staked their entire reputation on a massive revenue ramp-up during that period. If they can prove that their edge network is generating cash from insurance and financial sectors, the expectation versus reality dynamic will flip on its head. Right now, the market expects them to fail or at least struggle with the integration of their recent API Media acquisition. If they show even a hint of profitability, the short sellers who have been riding this stock down will be forced to cover, potentially leading to a massive squeeze. The risks, however, are just as real as the opportunities. Beyond the obvious dilution risk, there's the threat of regulatory changes in the blockchain and tokenization space. If the government moves to restrict how real-world assets are traded digitally, Datavault's entire platform could be sidelined. Furthermore, they're competing with much larger players who are also looking at data monetization. While Datavault has a strong patent portfolio with 70 filings, defending those patents in court can be an expensive and time-consuming process that could further drain their cash reserves. For an investor using Schwab Intelligent Portfolios or a self-investing strategy, the decision on a stock like this comes down to your tolerance for volatility. This isn't a set-it-and-forget-it type of investment. It requires a deep understanding of the tokenization sector and a willingness to watch your position swing 20% in a single day. The trading platform you use, whether it's the Fidelity mobile app or the Robinhood app, doesn't change the fact that this is a high-stakes game. To summarize the central insights we've covered today, Datavault AI is currently caught in a cycle where positive strategic developments are being overshadowed by technical weakness and insider selling. The expectation is that the stock is a falling knife, but the reality of their 2026 revenue guidance suggests a company that is preparing for a massive scale-up. We've looked at the Sports Illustrated deal, the Taiwan research expansion, and the critical support levels on the chart. The contrast between the current 68-cent price and the $4 analyst targets from firms like Maxim Group shows just how divided the professional community is on this name. Ultimately, the authority in this market comes from recognizing when the narrative has become too disconnected from the operational facts. Datavault is building a complex ecosystem for data trading that most people don't fully understand yet. Whether they can successfully navigate the transition from a research-heavy firm to a revenue-generating powerhouse is the only thing that matters for the long-term price action. For now, the intraday movement remains cautious, and the volume suggests that the market is in a wait-and-see mode. Keep a close eye on the upcoming earnings dates and any further disclosures regarding the Silex investment, as those will be the true markers of where this stock is headed next. Financial disclaimer. The information provided in this script is for educational and informational purposes only and does not constitute financial, investment, or legal advice. Trading penny stocks and AI sector equities involves significant risk and high volatility. Past performance is not indicative of future results. Always conduct your own research or consult with a licensed financial advisor before making any investment decisions. Like, comment, and subscribe. If you found this deep dive into Datavault AI helpful, please hit the like button and subscribe to the channel for more real-time market analysis and technical breakdowns.